We've got Berger Paints, the MD, Abhijit Roy, joining in the show right now. Abhijit, hi, morning. Always good to chat with you. And your Q3 has seen volume growth of high single digits. Tell me, what are the early demand trends shaping up for Q4 like? Does it seem like you'll get back to double-digit volume growth?
So in Q3, decorative had a double-digit volume growth. Overall, we had about 9.1%. Q4, the early trends, so a similar trend as was there in Q3. We need to again see, probably February will be better. January was a bit muted, but February might be better, and March we have to wait, and so the trends are, as of now, similar to what was there in Q3.
But having said that, I guess what aided the move for you also was the fact that there were softer raw material prices in the quarter gone by. Are you expecting operating margins then to remain in that range of 15 to 17%, considering price cuts, ad spends, etc.?
Yeah, that's the expectation, and as we have indicated, it was on the higher side this quarter. It should be in that range of 15 to 17%, not only for that quarter four, but also going forward.
Abhijit, which segments of your business are doing well? The premium ones, the mid pricing ones, or the slightly on the value side?
Mostly on the value side. There's been, some uptake, which we saw probably in November, December, January, more towards the luxury category. Typically, these months in the paint industry, the luxury category tends to do well. This year, it has been slightly muted on that direction, but the economy category did slightly better than expected.
Morning, just wanted to understand what the outlook is in terms of the competitive intensity. Is that a bit of a worry in terms of retaining market share, overall margins? And, do you think that that will change the industry share or cost structures? Would you maybe prioritize your margins over market share in this scenario?
So it's still early, the competition hasn't begun as yet, so in the true sense, we have always had, big competition within the industry. There are major players there already, both domestic and international, and we have been fighting. So I don't see anything majorly changing. Of course, there's a very big player coming in March, April, and that might shift a little bit in terms of the growth rates, but it's not going to be a very tangible effect on the overall revenue or profit growth. However, as we have said in the analyst meet yesterday also, we would prefer to prioritize market shares and remain in the 15 to 17% operating margin range. We don't want to go overboard on that. We don't want to improve our margins significantly beyond 17. But we will remain in this range and try and prioritize our market share.
I want to understand that the phase of your sector, the cycle, is that, yes, it's a big opportunity, decent margin, 15, 17% margins, the higher side, and hence you're seeing more players in the building material side also looking at this space. But going forward, what would really decide, the top notch in the industry or the top two notch? Is it technology? Is it pricing? Is it distribution? What exactly will determine which company would actually gain in terms of market share and profitability?
The same logic holds true, for the last 20 years, whatever worked will continue to work. And that's basically, distribution, branding. Technology is not a very big driver in this industry, either manufacturing. On the consumer side, yes, there might be some developments, the digitalization will be far more stronger there. But otherwise, basically distribution and branding, and then, of course, the influencer management, which includes, dealers, architects, builders, contractors, painters. So these are the fundamentals of the paint trade. I don't think that is going to change much.
All right, good to have you on board. Thank you for sharing with us your outlook.